welcome you all in this another session of the venture capital. In this session, we are going to discuss about venture capital structure, terms, and metrics. What are the metrics and how that we can use in venture capital? See, this venture capital is again highly growing space. If you are an investor or maybe accountant or fund manager, in all roles, I would say this venture capital, the understanding of this business is very essential. And in this particular session, we are going to discuss about same thing, guys. So let's start with the discussion. See, if I talk about VC, right? So VC is all about basically support to the startup ecosystem, and primarily, they target the startup businesses to invest money and support startups to scale their business to the next level. So let's see that what are the startups and how they help, because in this particular session we are going to talk about top VC firms as well. All right, so it would be like more practical session. So let's talk about now venture capital fund structure flow. So the first point here under capital fund structure flow would be fundraising, the general partners. Again, here also you can see GP and LP structure. GP means fund manager and LP means investors. All right. So GP general partners, and again raise capital basically from the limited partners. For example, let's say Sequoia Capital raised a 2 billion early stage fund in 2023 to invest in AI startups. So Sequoia again, which is a prominence, I would say, role or even this particular the fund already invested the huge money in different startups and companies. So you can go and check their information as well, like how Sequoia Capital raised investments, how they manage it. So you can go and check it. All right. In terms of now, the second point is again investment. The investment, basically the GP invest in startups. For example, Andreessen Horowitz, A16Z invested around 150 million in Clubhouse at a 4 billion valuation. So basically they calculate the business or startups valuations and invest money in startup businesses. And third, the point which you can say, which is a highly important, again, value creation. See, basically venture capitals funds helps the startup to scale via mentorship, hiring, networking, and strategic advice, right? So benchmark capital again invested in Uber's early stage and helped with the regulatory challenges and all. So there are startups. So it means, apart from, guys, capital is not only the problem, I would say. Apart from capital, as I said, hiring, networking, and even mentorship also, which is required. If you are an entrepreneur, you need all of this. Maybe let's say you have a money, but you don't have a contact, so you can reach out to the VC firms. Let's say you have a again funds, but you don't have a mentorship and again networking. You can again reach out to the VC firms. So this is how basically your venture capital fund structure flow looks like: fundraising, investment, and value creation. Then next would be a point here. Exit strategy. Again, under flow, guys, see, from fundraising to the exit and the distribution, both the the actions or activities, I would say, comes under your fund structure flow only. So now let's talk about exit strategy. The exit strategy, I would say, the fund realizes returns via IPO, merger and acquisition, or secondary sales. For example, let's say SoftBank Vision fund made around 30 billions when ARM company, which is went public in 2023, right? So basically, when the venture capital funds, they get exit, so they get exit through IPO. When companies, basically in an IPO event, what happened, we have discussed several times. In an IPO event, what happened, common public, they invest money, and the VC firms, means venture capital firms or private equity firms, they basically sell it out their stake to the public, right? So SoftBank again, which is one of the big VC player, they have invested huge money in a startup ecosystem. Then the last action which you can see under the capital fund structure is like distribution. So distribution, which is something profits are shared among LPs and GPs based on their the 80-20% split, right? So 20% again carried interest also can be shared to the GP general partners. And if you see in the 2012 Facebook IPO, SL partners earned 10 billion while GP receives 2 billion as a carry, right? So this SL partners was the VC investor in Facebook company, and when Facebook got listed, they made a profit of 10 billion. SL group made a profit of 10 billion. 8 billion they shared with LP, and 2 billion that carry means again, which is a part of profit, which is a part of capital gain received to the general partners. All right. So guys, see this VC and private equity fund space, which is a highly growing space. Highly means very highly growing space. All right. But it seems like again private equity fund only. Let me tell you something. VC venture capital firms, they are small brothers of professional private equity funds. All right. So now let's talk about the key venture capital terms. First one is carried interest. The GPs share profits. What is carried interest? The GPs share of profits, usually 20%, right? If 16Z exit an AI startup it means guys it's an investment, right? A 16Z exit it means it's again VC fund, means invested in AI startups for 1 billion, invested at 1 billion, and LP receives 800 millions. The GP gets 200 millions, 20% in carried interest. So basically this particular VC fund made a profit of 1 billion. So out of 1 billion, 20% the amount received to the basically I would say fund managers, right? GP it means it's your fund managers. So that 20% we can call it as a carried interest. Carried interest is nothing but it's again part of a profit, it's a part of a gain, and this is common in private equity and even venture capitals. So another term is management fees. A 1.5 to 2.5% annual fee for a fund operations would be charged to the limited partners. The Sequoia Capitals, which is a $2 billion fund, earns 40 million annually in management fees, which is a 2%. So this is again practical example which you can refer in your interview process. Now the another key term which you might see in a VC capital or venture capital businesses like pre and post money valuation. For example, let's take example. If a Stripe is valued at a 10 billion pre-money it means before raising fund. Understand this. Let's say your actual means current value is 10 billion, right? And you are looking for a 2 billion value. So if you raise 2 billion, which would be around 12 billion, right? Because your current valuation plus new valuation. Now if I talk about the total means how pre and post valuation works. So let's understand this. Let's take example. If a Stripe is valued at a 10 billion pre-money and raises 2 billion, its post-money valuation is 12 billion. Because 10 billion was the current valuation and they have raised again another $2 billion extra. So that becomes 12 billion. And see, VC funds, they always check pre and post money valuation before investing capital in a startups, because this pre and post money valuation, which is one of the highly critical metrics and which help to understand the business valuation, right? So next the capital terms or I would say in a venture capitals, you can see the more the key terms like the another one is another term is wait a minute. Convertible notes, right? A convertible notes, guys, it's like a bonds, I would say, a debt that converts into equity later, For example, again, if you want to understand in a practical way, Airbnb raised 1 billion in a convertible debt during COVID-19 because they wanted some liquidity. So they raised 1 billion in convertible debts during COVID-19 and later converted into shares. So convertible notes, later on it can be converted into common equities or preference equities. Now your question would be, sir, why we raised debt through such a convertible notes? See, initially if we have nobody trust on equity, so they just want the assurance, so that's what investor participate in convertible notes. And once you have a positive, let's say, cash flow or the solid business model, then you can convert them into equity. So investor also will agree with that in a particular plan, correct? So convertible notes is the again medium where I would say most of the VC funds, they raised capital and invest. Then another key and highly important is, guys, venture capital, you can see term like SAFE. SAFE is nothing but it's a kind of, again, commitment, a flexible investment instrument, I would say. Y Combinator, right? Startups raise capital via SAFE before setting a valuation. See, if you don't want to go through the valuation, or if you don't have a valuations details and anything as such, so it would be difficult to split shares, right? So in that case, what you can do, you can raise funds through SAFE. SAFE, it means systematic arrangement for future equity. Basically, you can raise funds from the investors at XYZ price, but in future you can maybe after 6 months or 1 year, when you actually set up a valuation round, then you can transfer equities to the investors, right? So that process will call it as a SAFE. So most of the venture capital funds, they go through the SAFE as well. Then another key term is, guys, which is a dry powder. Dry powder is nothing but which is unused capital reserved for a future investments. For example, let's say Tiger Global had 6 billion in dry powder up to its 2021 fundraising to invest in a late stage startups. Dry powder sometime which is a good, sometime which is not good. If let's say that dry powder, it means it's a called amount basically, and that called amount which will be linked with the preferred interest, correct? If we have a more dry powder, and let's say for 1 or 2 years, if the fund is let's say freely park in bank account, so eventually fund will have to pay preferred interest to the investors. So it means it will impact on overall fund's performance. So if you have a dry powder, it is a good, so that you can grab market opportunities. But what if you have a fund but you don't have any anything, means investment opportunity in hand for next 24 months or 36 months, so it would be difficult in that case. So dry powder is nothing but it is a part of capital call which you have raised, but yet to invest in a securities, so that term will call it as a dry powder. I hope you got this. So the next is again key things from the the accounting perspective, like accounting and reporting perspective. What are the reports and activities which we perform? So let's understand this. So here you can see the first one is we prepare capital calls and distributions. For example, let's say if SL Partners has 500 million funds, SL Partner, again VC fund name, guys, right, million fund, they may call 20% initially and 100 millions out of 100 million, right? And means total amount would be 100%, means total fund size is 500 million, but they may call only 20% initially and the rest in phases. So that each phase, guys, each phase we can call it as a capital call. Each phase we can call it as a capital call, and same amount it can be returned or distributed back to the investors. So that process will call it as a distribution. So, so it means this accounting and reporting that we need to do it for capital calls and distribution. Then second one is fair value adjustment. This is or measurement, I would say, because see in a VC funds you can see like quarterly and yearly accounting. In that case, means as an accountant you need to do the accounting or valuation of assets on a periodic basis to understand the totals, the current value of your investments portfolio. So for example, let's say SoftBank had to write down WeWork's valuations from 47 to 47 billion to 1 billion due to failed performance. So it means, see guys, VC means it's a highly risky business. If you see, fund had invested fund, maybe they would have invested XYZ amount, but they had reported $47 billion in their book. But eventually what happened, when the WeWork failed in terms of performance, the valuation was dropped significantly from $47 billion to $1 billion, and they had to write down the value in balance sheet as well. So again, this fair value measurement is also one of the key activity or report which we perform in a venture capital business. All right. Next one is carried interest calculation. So carried interest calculation, we prepare a separate report for carried interest, profile, carried interest calculations and all as and when required, and we perform it frequently. And we also see carried interest basically at the time of let's say, I would say at the time of the return of capital or return of, let's say, gains and return of profits and everything, we prepare a model and we distribute it, and at that time we charge carried interest. So let's understand it. Benchmark Capital, again Benchmark Capital is venture capital fund. So what they have done, Benchmark Capital makes a 2 billion exit, means at the time of exit they got 2 billion from the exit. So LP gets 80% of 2 billion, which would be around 1.6 billion. LP means investors, they got it here if you see this term, and the rest amount GP gets 400 million, which is 20% on 2 billion exit. So this is how it looks like. We see an accounting reporting in terms of means venture capital reporting or accounting. So all that activities comes into picture. And even if you are looking for an interview, guys, it's very important, you should understand it. What is capital call, what is distributions, for value measurement, carried interest. And even if you if you incorporate your own fund anywhere in any jurisdiction, all of these terms are very important because you will have to do the accounting of your books, fund books. All right. So there could be many other activities as well, but in this particular session, I just wanted to touch to the very important topics, not in details, but at least to cover very important aspect. Now, if I talk about investment metrics in a venture capital, you can see like IRR, which is key major the metrics, I would say, which used to measure the annualized the returns. So as we know, Sequoia, which is venture capital in early, the investment in WhatsApp had an IRR of 143% when Facebook acquired it for 19 billion in 2014. When because as we know, Facebook and WhatsApp both were different companies, but when Facebook acquired WhatsApp, so Facebook acquired at 19 billion. So at that time, so 143% IRR was of Sequoia investments when the Sequoia invested in WhatsApp. So basically IRR, which helps to understand the investments, the situation, whether it is in a profit or whether it is in a loss. All right. Then second, the measurement is MOIC. MOIC, it means multiple of investments at the time of exit, basically the total value divided by invested capital. So how you can calculate MOIC? Let's say Lightspeed Venture invested $8 million in a Snap, right, and which returned 2 billion. So it means invested amount was 8 million and returned amount back to the fund was $2 billion. Just simply calculate it, right? 800 million divided by just 2 means total value divided by investor. Sorry, $2 billion divided by 800 millions. Just simply calculate it, you will reach at 250x. So it means the basically investment has been multiplied by 250x, which is like huge return, right? So IRR and MOIC, which is again two critical metrics, I would say, which used in venture capital funds. The another one is TVPI, which talks about the gross multiple of returns, right? Total DPI plus RBPI. So basically, Tiger Global's 2020, in what happened, fund had a TVPI of 3.2x, meaning LP saw a 3.2x return on invested capital. Total value paid in. So TVPI stands for total value paid in. So whatever amount you have, let's say, invested against that, so how much value that the fund has returned to the investor. So in that way we calculated TVPI. All right. So DPI it means dividend paid in, RBPI it means return value paid in, basically means how much value that the fund paid back to the investor, or realized value paid in, you can say. All right. So these are the three metrics which prepared or perform in venture capitals and even private equity funds. Now, as again, guys, you're from the finance, so you should know it. What are the top VC firms, and you can also find remote opportunities with those VC firms, because they don't care where you work from. They only want someone who is knowledgeable and skilled, who can take care of their business, right? So here we have a three top firms. One which is Sequoia Capital, and they have investments in Apple, Google, WhatsApp, Airbnb, Stripe. Sequoia invested around 60 millions in a WhatsApp, which was sold for a 19 billion to the Facebook. So look at the Sequoia, which is renowned name in venture capital world. Second one is like Andreessen Horowitz, A16Z, the short form is, right? So they have investments, like, means they made investments, I would say, or they still have investments in Coinbase, OpenAI, Instacart, Stripe. So invested around 50 million in OpenAI, and now OpenAI is valued at 80 billion. Look at this. So how they are making money. See, stock market is nothing, guys. Stock market is just a bullshit game. But actually money, who is making money? Private equity funds and venture capital funds, they are making huge money. And who is investing in VC and in a private equity space? The rich people only, they are investing in private equity space. See, the capital market is just for making fool to the people like us. That's all. All right. Then Excel Partners. Excel Partners, again, which is a venture capital funds. They have investment in Facebook, Dropbox, Flipkart, Slack. SL invested 1 million in Facebook and exited at 10 billion. Wow, it's a very big number, guys. Invested 1 million only, and the valuation of Facebook was 10 billion at the time of exit. So it means they sell it out, the equities, to the common people and raise funds from them. So they got their liquidity. Fantastic. All right. These are the big firms, so that you should know it. Who is making how much money and in which business segment. All right. Then again, another one is like Benchmark, is another venture capital fund. They have investment in or invested, or investment, I would say, in the Uber, eBay, Twitter, Snap. Benchmark, 12 million Uber investment turned into 6.8 billion at IPO. Huge money they're making. Tiger Global, they had investment in Byju's, or even they have investment, I would say, Flipkart, Stripe, Databricks. Invested 1 billion in a Flipkart, which was later acquired by Walmart for a 16 billion. All right. Tiger Global made a huge profit in Flipkart. So yeah, these are the top VC firms. So now if I conclude which market is best, let me tell you guys, venture capital and private equity market, which is highly growing market if you compare with public market, because public market, it's a trap for common people. But the VC and private equity funds, they're actually making good amount of money. All right. Now, if you want remote job or any jobs in this both the space, what you can do, you can reach out to us. We'll guide you. We have connects. Will if they have any openings as as such, we can help you to share your resume with them. All right. Apart from that, if you're looking for a course which can cover the in detailed about VC or LP, ZP structures, accounting, reporting, and fundraising, then you can reach out to us. And if you like this content, don't forget to share this with your loved ones, because we wanted to help you to understand. Means we wanted to support you, those people as well who want to understand these products. All right. So, and again, if you're a fund manager or if you're, let's say, student and want to start your own fund, still we can guide you for that as well. All right. So, thank you very much, guys, for watching this. We'll see you next session. Thank you.